Let me ask you something. Can you trust your numbers? Not after your bookkeeper cleans up the spreadsheet, not after your CPA asks 3 follow-up questions, not after someone manually compares bank activity, invoices, expenses, and payroll. I mean this. Can you trust your numbers when you actually need to make a business decision? Should you hire? Should you hold back? Can you afford that piece of equipment? Is the client profitable? Do you have a clear understanding of your expenses? Do you have enough cash for payroll, taxes, and the next growth move? This is where accounting and financial reporting software really matters. It's not just about bookkeeping. It's about confidence.
Welcome to End Business Tech Frustration, the podcast for small and mid-sized business leaders and entrepreneurs who are struggling with technology that is not meeting their business needs. I'm Jim Kineon, and for more than 35 years, I've helped businesses fix their tech, align their people and processes, and implement systems that actually work. In each episode, I break down real stories, practical strategies, and simple frameworks that help you choose the right tools, roll them out the right way, and build a business that runs smoothly. If your technology isn't supporting your business and delivering the results that you need, you're in the right place. Let's get started.
Today, we are talking about accounting and financial reporting software. That may sound simple. Most people think of it as the system that sends invoices, records expenses, reconciles their bank, and produces profit and loss statements. And yes, that's all part of it. But the real purpose, accounting software should help your business record transactions, manage cash flow, track income and expenses, pay bills, invoice customers, reconcile your bank accounts, and produce financial statements. For small and mid-sized businesses, it also helps reduce spreadsheet errors, improve cash visibility, supports tax preparation, creates financial controls, and helps leaders make better decisions. And here's what I've seen. The visible problem is often the accounting software, but the real issue is much deeper. The chart of accounts is messy. The reporting structure was never designed. Bank reconciliations are behind. Payroll, sales, inventory, and project data live in separate places. People use different categories for the same expense. Managers ask for reports, but no one has defined what decisions these reports are supposed to support. That's when accounting software becomes more than a financial tool. It becomes a mirror. It shows you where your business processes are clear, and it shows you where they're not. Let me offer an example. I worked with a mid-sized luxury goods manufacturer, distributor, and retailer who had outgrown their existing accounting and financial reporting systems. Those systems were not integrated with their manufacturing, online sales, retail store operations, or other core business functions. As a result, leaders could not quickly see the full financial picture of the business. They also needed more flexibility to track the costs of special projects, business initiatives, and new products. Their old system just didn't provide that level of reporting easily. To solve this, they decided to implement a new integrated system across their operations. The goal was to improve financial reporting, give leaders quicker visibility into the organization's financial health, and shorten the monthly close processes by several weeks. The project was not just about installing new software. The company also had a significant amount of tribal knowledge that needed to be captured and documented. So a successful implementation required more than just installing and testing the software. It required clarifying and standardizing business processes, educating employees so work was performed in a consistent manner, and ensuring the entire organization understood the importance of supporting the effort. So let's talk about what financial and reporting software is supposed to do. At its core, this type of software should help you do several things well. It should maintain your general ledger. That's the foundation of your books. It should organize your chart of accounts. That determines whether your reports are useful or they're confusing. It should handle accounts receivable. That means invoices, payments, and customer balances. It should handle accounts payable. That means vendor bills, due dates, payments, and cash planning. It should connect to bank feeds and support reconciliation so that it reduces the manual entry and it helps to catch errors. It should track expenses. That helps with tax accuracy, cost control, and management reporting. It should produce financial statements, profit and loss, balance sheet, cash flows. It should support sales tax or value-added tax if that applies. It should include user permissions so that not everyone can see or change everything. It should have an audit trail so that you know who changed what and when. So that's the core of the software. And for many small businesses, that's already a big improvement. Now, as a company grows, the accounting system often becomes a broader financial operations platform. That's when additional functionality starts to matter. You may need automation, such as recurring invoices, bank rules, payment reminders, approval workflows. You may need dashboards for cash position, receivables aging, payables, revenue trends, and budget versus actual comparisons. You may need reporting by department, location, project, fund, class, customer, or entity. You may need integrations with payroll, CRM, e-commerce, point-of-sale systems, inventory, time tracking, banking, or expense reporting. You may need mobile access for receipt capture, approvals, or dashboard reviews. You may need workflow tools for purchasing, expenses, or month-end close. You may need security, two-factor authentication, role-based permissions, backups, audit logs, and encryption. You may need nonprofit fund accounting, revenue recognition, multi-entity consolidations, or more advanced compliance support. And yes, you may also want AI features. AI can help with transaction categorization, anomaly detection, report explanations, and cash flow forecasting. But I need to be clear, AI doesn't fix a messy accounting process. If your chart of accounts isn't clear, if your categories are inconsistent, if managers don't agree on reporting needs, AI may just create confusion faster. The foundation really does matter. Now let's walk through this software by organization size. Not because employee count is the only thing that matters. It's not. A 40-person manufacturer may have more accounting complexity than a 90-person professional services firm. A nonprofit with grants and funds may have different needs than a local services company. A retailer with inventory and e-commerce may have different needs than a consulting firm. But employee count is a useful starting point. So we'll take a look at it in three groups: 1 to 25 employees, 26 to 100 employees, and 101 to 250 employees. Let's take a look at that first grouping. At 1 to 25 employees, simplicity usually matters more than advanced functionality. The business needs accurate books, timely invoices, clean bank reconciliation, expense tracking, basic reports, and easy access for accountants or CPAs. The best system is usually the one the owner, bookkeeper, and CPA will use consistently. Now that's key, because a system with more features is not better if no one keeps it current. So the things to look for a 1 to 25 employee business: look for easy setup, simple invoicing, payment collections, bank feeds, reconciliation, receipt capture, basic financial statements, sales tax support if needed, payroll integration, accountant access, low monthly costs, and clear support resources. At 26 to 100 employees, the business usually needs more than bookkeeping. it needs reliable financial operations. There are more users, more transactions, more approvals, more reports needed, more payroll complexity, and more managers asking for visibility. That's where many companies outgrow the informal way they handle accounting in the early years. The software may still technically work, but the processes around it start to strain. So at this size, look for multi-user access, role-based permissions, department and project reporting, budget versus actual reporting, accounts payable workflows, expense approvals, payroll integration, CRM or e-commerce or point of sale integrations, audit trails, reporting customization, and reliable support. At 101 to 250 employees, accounting software becomes a business-critical financial platform. The questions change. You're no longer asking, can it do bookkeeping? You're asking, can it support controlled, timely, and scalable financial management? And that's a different question. So at this size, look for multi-entity support, consolidations, advanced permissions, audit trails, close management, approval workflows, procurement controls, accounts payable automation, revenue recognition if needed, fixed asset management, budgeting and forecasting, integrations, APIs, security controls, implementation partner quality, and scalable reporting. All right, so how do you know whether to buy, delay, simplify, upgrade, or replace your current systems? You're probably ready to adopt and upgrade your accounting and financial reporting software if reports are late and unreliable, if the owner cannot answer basic profitability or cash questions. Invoicing is delayed. Bills are missed or paid without review. Spreadsheets are being used for core accounting. Payroll or sales or inventory data is disconnected. The business needs department or project or fund reporting. Or month-end close just takes too long. But you may not be ready for a larger system if your chart of accounts is messy. No one owns financial processes. Bank accounts are not regularly reconciled. Leadership is not aligned on reporting needs. Managers do not agree on how departments or projects should be tracked. Or there is no budget for the implementation, training, or cleanup. So you should think about this. Sometimes the right move is to buy now, and sometimes the right move is to delay. Sometimes the right move is to simplify first, and sometimes the right move is to upgrade your current platform, and sometimes the right move is to replace it. The decision should not be based on only features. It should be based on readiness and your strategic goals. So here are the takeaways. First, accounting software is not just about keeping the books. It's about producing timely, trusted financial information so leaders can make better decisions. Second, the right system depends on size, complexity, reporting needs, controls, integrations, and internal capacity. Third, simple businesses usually need simple systems. Growing businesses need controls and reporting, and more complex organizations need scalable financial management. And fourth, one-person accounting does not scale forever. As the organization grows, support, approvals, reporting, integrations, and controls must be shared across roles. And finally, the best accounting system is not the one with the most features. It's the one your organization can implement correctly, maintain consistently, and use to produce financial information people actually trust. So here's your action step. Before you evaluate accounting software, write down 3 decisions your current financial reporting system does not support well. Not features, decisions. For example, can we see profitability by project? Can we see cash clearly enough to plan hiring? Can managers see budget versus actual? Can we close the month on time? Can we trust our receivables and payables? Can we report properly on fund, location, department, or entity? Once you know these decisions, you can evaluate the software with much more clarity. Remember, technology should support your business. It shouldn't slow it down.
Thanks for listening to End Business Tech Frustration. If you enjoyed today's episode, subscribe or follow the show so that you never miss an insight. And if your business is struggling with technology that doesn't support your goals, connect with me on LinkedIn. I'd love to hear how technology is impacting your business, whether it's good, bad, or just downright painful. Remember, your technology should empower your people, strengthen your processes, and make your business thrive. If it's not doing that, I'm here to help you get your tech right and to get real value from it. See you in the next episode.